Good evening, this is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 3rd of August. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals, right? I'm sending out all the membership stuff tomorrow. The memberships will be from the 5th of August, which is the anniversary of my leaving the art of chart, and but I am going to give a couple of days to for people to catch up if they want to. So the Wednesday webinar is likely to be free, and the Tuesday and Wednesday webinars at crypto will likely be free as well. All right, great. Let's have a look at the charts now. Friday. Oh, by the way, in case you're not aware of it, I did a post today looking at the equity markets and a modest proposal for what may well happen in the first 2 days of next week. I'll be talking about that here too, but if you haven't seen the post, check it out. Okay, looking at ES here, we've got a possible 60-minute buy signal brewing, and we've got possible RSI 14 and RSI 5 buy signals brewing on the hourly SPX as well. We came down to one level which I'd marked in as a potential head and shoulder neckline. If we form a head and shoulder here, that will get us down to the second level I marked as a neckline. And because we saw, obviously, SPX and Qs were lagging, we saw the hard breaks below the daily middle band that I was looking for on Friday after the awful jobs numbers. But obviously, Dyer and IWM had already started the day before, and they both closed below their daily 3SD lower bounds. Now, I was seeing comments in the Slope of Hope that this generally means more downside, but that was a yes and no. I looked at 3 instances on IWM over the last couple of years, actually all in the last 8 months, actually. They all saw more downside afterwards, but the two which weren't after an extended downtrend, both delivered a rally basically from the low of the first break below the 3SD lower band. One of those lasted 2 days, one of those lasted 2 weeks, but they both delivered a rally from just below. And I'm thinking that maybe what happens here, we've got some positive divergence at the close, we've come down to some natural support levels on SPX and on NQ. We may well see that here. We've got a possible 60-minute buy signal brewing here on the hourly chart on the Qs. We've got possible RSI 5 and RSI 14 buy signals brewing. I'm liking this. In terms of RTY, that's broken down with the target obviously down here in the 2100 area, and I'm thinking we'd see a bit of a rally, and then we come down and get that target. YM, pretty much the same. So that's what I'm thinking of. It isn't necessarily going to happen, and obviously much depends on the market's reaction to the open, but we will see. So hang on, bear with me. Let's have a quick look at DAX and STX. DAX, we've got a breakdown. This is no longer a possible bull flag forming. We do have a large potential level top here, and I've got the support for that down in about the 23,100 area. We may well see that break down. Looking at the STX, we haven't got as quite a nice level top here, but it is a potential level top set up here, and that has actually already broken down. I haven't marked in the target below, but just looking at it by eye, that would be in approximately the 4,900 area. All right. The only positive divergence we had on any of these was on basically ES and NQ, but those are the most important ones because they're the ones with the obvious level and obvious setup to set up a right shoulder on a head and shoulder pattern. All right, let's have a look at those on the big picture. And while I'm doing that, I'm actually just going to have a quick look at our charts. So bear with me a moment. I'll have a quick look and see what's happened at the open tonight. Because the markets have recently opened, and we will see. All right, ES up a little. A very, very small amount. Obviously, I'd be looking for more than that. Okay, right. On SPX, I was saying in my post on Friday morning that we really need to see a strong break below the daily middle bands on SPX and the Qs, and we got it. That's the one on SPX, and this is the one on the Qs. Both of those almost reached the daily lower band, which of course have been compressing. We made the RSI 5 sell signal on ES, and we'd also lost. This is a good illustration. I did mention in one of my posts last week that you quite often see a signal fail and then it make target. This is a very good demonstration of exactly that point. So don't have an RSI 14 sell signal here on SPX, but we do have one. No, we don't have one on the Qs. We do have one which is now fixed on the dia chart, and I'm pretty sure we've got one on IWM, but I'll come to that. All right. Actually, let's have a look at the IWM one now. And yes, we've got a weak RSI 14 sell signal fixed there. Looking at the hourly charts, just to use the ones that, sorry, it's a bit of a, I have a whole mass of windows open here for these, but this is the chart I posted today on SPX, and what I was talking about was a right shoulder rally. Actually, this would have an ideal high in about the 63.05 area, I think, and the daily middle band closed the day at 63.02. So actually, this would make a really nice back test of the broken daily middle band. Looking at the Qs, it's not quite as clean. The ideal right shoulder high actually. I've marked that in wrong. Sorry, I have. Sorry, I don't know why I missed that earlier. This actually would be. This would be the ideal right shoulder high, and that would be in the 561 area. And I actually had the daily middle band close the day at I think 562. So actually, that fits better than the one I used in the post earlier. So I'm actually going to update that post before I go to bed. So that's where we are on it. Really, we could see nice back tests of the daily middle band on both of these. I could set up a nice right shoulder for head and shoulders, and then that could take us down to the next obvious possible IHS right shoulder level. So we will see how that develops, but it looks pretty good. All right, looking at dia. I like this move down here. It gets us down into about 38.2 area, except. Yeah, it does. So I'm liking that. It's a nice looking target, and that's also another potential head and shoulder neckline. And IWM again gets us almost perfectly down to another head and shoulder neckline. This one's in the 38.2 area, and I've got another one down here at 19910, which is a very, very nice match with the 50% retracement. All right, let's have a look at DAX and Nikkei. DAX. Nice looking level top here, obviously. I've marked in the potential targets here if we see a breakdown. I've got those in about the 21,350 area and the 21,500 area. That would be the target range. Hasn't broken down yet, but I would be expecting it to, in all probability, as we go on with the retracement, which is likely to go lower statistically. Also, the other thing is, this is the first sign of weakness. I have been saying periodically over the last few months, so far this year, that it takes a while for bad news to feed through the figures. And it looks like we just reached the point where we've had the bad news go through to the figures. Does this mean that we're not going to see another high this year? I'm not convinced of that. I quite like the chart setup for seeing a high late in the year or early next year. And I would say there's another big thing. I mentioned this on the post as well, that is worth considering. After Trump imposed when Trump imposed the tariffs, he imposed them on the basis of an emergency, creating a state of emergency over the deficit, which wasn't obviously an emergency. America's been running a deficit for decades. But the trade deficit, and he used a power which was given, which was I think given in the early 70s, and which Nixon used, and but really this power was directed for tariffs, not really for anything else. It was used. Not tariffs, sanctions, and it was used for tariffs once, but they were short-term tariffs, which were in effect sanctions. So, initial federal court struck down the tariffs, and then it was appealed, and it was continued. And then the appeals court has been hearing it, and from what the judges were saying, although we probably won't see the ruling for weeks, they're probably going to rule against it as well. But then it'll be stayed again in all probability, and it'll go to the court. Now, there's two interesting things that come from that. One, we may get the Supreme Court striking down the use of these tariffs, and that could give us a really nice late year rally in a couple of months. The second thing is, because it stayed on the basis that the federal government can continue to collect the tariffs, and that will, in the event that it is overturned, then they'll repay all of those tariffs. And very interestingly, Howard Lutnick, who I must remember not to call Nutlick, even though it's such a great nickname for him. But Howard Lutnick's children, having sold, I think, given his the company he made all his money on to his children, his children are actually buying the rights for those tariff repayments from companies at about 20 cents to the dollar, effectively betting that the tariffs will be overturned. That's interesting. Not necessarily that significant, but interesting. I'm wondering how much of that is on advice from him. They certainly should be overturned. Because the fact is, this is a power of Congress, and really, with Trump having obviously both houses of Congress, I'm a bit surprised he didn't actually just pass the tariffs or get Congress to give him the power to do the tariffs. But for some reason, he didn't do that. Obviously, he could do it later, but these ones may well get struck down, probably should get struck down, because this isn't what that state of emergency was ever intended for. All right, Nikkei hasn't retested 42.4. I'm still optimistic that's going to happen later. We shall see. And also, depending on how far we get a retracement here on IWM, I was talking about the possible head and shoulder neckline down here. I think at 199.10. Now that's a very significant level, because that actually on the IHS here, that is the right shoulder low. If we go below that, then that would be below the 50% level on this move up from the April low, but it would also invalidate this IHS and set up a, not strong, but a serious target to retest this low here at 171.36. So that is the key level to watch on IWM, and it's interesting that that to reach it, obviously a tick below it would invalidate the IHS. It's a very significant level which should be watched. Just to mention on DAX, look at this lovely way. Isn't that beautiful how the 50 DMA acted as support? Isn't that gorgeous? So often see that, but it's lovely to see. That was obviously a very serious just support break on DAX. So we had been holding it. Really, we hadn't seen a break below the 50 DMA. When was that? Yeah, we saw the break below for the move down to the April low, broke back above in the April, but most of the US indices, it was really the daily middle band, and it was acting as support here too, but really on DAX here, it was the 50 DMA, and that just held beautifully. Okay, let's move on. Let's have a look at the dollar. Okay, looking at the dollar, we saw a harsh move back, and that's interesting because, of course, we've got an IHS which is broken up here. When we've got a little head and shoulders, remember I've mentioned a few times that often when a head and shoulders is failing, you've got a head and shoulders set up in the opposite direction. We've got an IHS going up here. You've got a head and shoulder, which is broke down slightly on Friday here. And if we go down, and that will get us down to the level where this IHS is in serious danger of invalidation. I am wondering if this might deliver a move back to retest this low, which obviously we failed to do when we broke down from this head and shoulders. So maybe, but I'm not convinced actually this uptrend is over. Let's have a look at the other currencies. USD, we didn't have a head and shoulders going down. We've certainly got one going up, but this could be a larger head and shoulders forming here. So this could be supporting continued downtrend on the euro and continued uptrend on the dollar. Possible 60-minute sell signal brewing. GBP USD. Nothing is sure here, but we do have a potential IHS forming here. Yen, wow, what a drop. No obvious pattern set up here. But that was quite a decline. It's USD CAD. Obviously, we broke up from this triangle, and this was the obvious flag resistance, and we broke up through that too. I don't have an obvious trend line, and I looked, which ends up in this high here. This so far just looks like a retracement at the moment. It's holding support at the monthly pivot. I'm not convinced that this retracement here is going to take the dollar down much. I think that was a first reaction, but it may not last. Double bottom has broken up here on the Australian dollar and actually made its way most of the way back to the low before bouncing. NZ, no obvious pattern, could be a part-formed head and shoulders. We shall see. All right, let's have a look. Hang on, I'll just get back to the right place. All right, let's have a look at the currencies. Okay, looking at the US dollar. No current divergence here. Obviously, we've got an IHS. This is just a different scale view of what we were looking at here. The IHS has got a great looking target up at this test, basically, of this IHS possible IHS neckline, or possibly two asymmetric double bottom here at 101.98. I really like this target, and at the moment we're only back testing the IHS neckline. I'm not convinced it's going to go lower than that. Looking at euro, possible head and shoulders forming maybe. Looking at GBP, it definitely got a head and shoulders, and it's already broken down. We could be forming, if we see a rally here, we could form a larger head and shoulders, which should break down with a target, which would be a lot closer to this rising support trend line. Looking at USD JPY, frankly, this looks as though it might be a bear flag, but I didn't get any decent trend lines looking for that. USD CAD, possible IHS forming here. We've reached head and shoulder. We've reached a head and shoulder neckline, IHS neckline, and this is coming back at the moment. This could well be setting up a bigger bullish move. Do we have anything like that on US dollar? Not really. Technically, I could use this, but the right shoulder high is higher than this low. Sorry, is higher than this low here, and honestly, I don't like that in a pattern. Possibly, I might be mistaken about that, but I don't think I am. I've not really seen good results from ones which formed in a similar way. Australian dollar, not particularly clear what's happening on the Australian dollar. NZ USD, we've got a possible double top here, which is trying to break down, which would fit, obviously, bullish dollar. I'm not convinced that we're going to see more than a 1 or 2 day decline in the dollar, and at the moment the bullish setup for it looks pretty good. CB, I've been talking about a retest of this high here, and we didn't quite see that on Friday, but I think it's coming. This has been coming since the head and shoulders failed, and that is the obvious next target after a fail. ZN has already made that target. Could be part of an overall rising wedge. I'm not sure this means a great deal in the bigger picture, but the head and shoulders formed, broke down, and we've gone back up and retested the highs. Haven't quite made that on ZB, but we have already made it on ZN, and I'm expecting to see it on ZB. All right, let's have a look at the bonds, where all of the head and shoulders that broke down failed. I didn't, well, I think we did have one on TNX, but I haven't been looking regularly at the 60-minute charts on that. We had an IHS here, and a head and shoulders formed in the opposite direction. That's broken down, and we're almost to retest this low, which I would expect to see. TLT, we had a head and shoulders break down here and fail. That's got a target up to retest this high at 89.974, and we almost made that, and I'm expecting to see it made. So basically, head and shoulders broke down, rejected back to the high. All pretty routine. What does this say on, what are we seeing on the bigger picture? Well, on TLT, I would note that we've got a nice looking double bottom here, but it's too big. It's too big really to be a double bottom. Doesn't mean it couldn't make target, but it wouldn't make target as a double bottom. All right, TNX. Less clear what's happening here. We've been really compressing all year, and we're still compressing. Bigger picture, looks like a triangle. We will see whether it continues as developing as one. All right, looking at CL. Now, CL is an interesting one because I'm watching this with great interest because there is a lot of potential in both directions on the oils. So really, NG looks pretty solidly down. It's more of a mixed picture. I'm leaning short on the oils, but there is definitely a potential picture to get this higher and potentially a lot higher. All right, looking at CL, no current divergence worth the mention. We've broken back below the monthly pivot and the new week pivot. We had a little head and shoulders here. I haven't drawn it in, but it's pretty obvious. And it hasn't quite made the target, which I would have just a shade lower, just below 67 really. Arguably, it's probably got close enough already, but I think there's probably, a few ticks on it. Looking at HO, we had a stiff decline here. Now this could be a larger head and shoulders, a larger bull flag forming. We will see, but if it gets much lower, then it's going to be too big to be a bull flag. We do have a little positive divergence here. Looking at gas oil, I'm leaning towards this being an overall megaphone, and we got down beyond the megaphone resistance, and we're coming back in, and it's obvious target megaphone support. This could be a bear flag. And if we saw a breakdown below this trend line here, that would have a target and a retest this low here in the 2.0149 area. All right, looking at NG. NG has broken up over declining resistance in a very weak rally, which has already made the possible near-miss target on the 60-minute buy signal. I'm thinking this is going to at least retest the low and may well go lower. So we shall see. All right, looking at the big picture on those. WTIC. On the daily charts, we've still got a weak RSI 14 sell signal fixed. Not sure how seriously to take it, but that does have a lean downwards. We did finally break up over the daily middle band, and we've come back to test it. So I'm watching with interest to see whether that breaks. Bigger picture. Not seeing much in the way of divergence, but I would note that we've got a potential IHS here, which could potentially break up on a move back up over about, sustained break up over 78.4, which was the last high. Could have a target up in the 102 area. It's not the only bottoming pattern here, potentially. Heating oil, we've got a potential double bottom here too. It's not as big, but it is significantly big. No, actually, I think it is as big. All right, a sustained break up over 2.7 here could see us take a move up into about the 3.4, 3.5 area. That's actually not a bad looking pattern, and it backs up the one that we've got potentially here on the CL chart. Now, I don't know what that would cause that. More war in the Middle East, maybe. But at the moment, I am wondering about that. In terms of the shorter term chart, this kind of looks like an inverted head and shoulders forming. And maybe it would be that rather than the double bottom. We shall see. All right, looking at gas oil. Gas oil, potentially, we've got a big double bottom here. So you can see why I'm talking about the potential for upside here. I'm not really seeing why it would do that. But I am wondering whether it might do that. I mean, really, in terms of the bigger picture, I'm thinking we might come back to these support trend lines, just expand these wedges. But ultimately, these probably will break up. The point I'm making here is that we don't have bad patterns for these. And again, I'm thinking we might well come back down and hit this trend line support here. So I'm not thinking a lot lower, but the upside looks potentially pretty substantial. Looking at heating oil. Again, I'd be thinking about a move down to the support level. Now, it's already quite well below where it's been for a lot of the last few years. So I am thinking about that. But the thing is, we've got big trends coming down from the highs in 22, and these look as though they're in the process of breaking up. Now, the question is whether they're going to break up now or they're going to break up later. But sooner or later, they're going to break up and retrace, and those could be substantial moves. So that's the oils, and that's why I've got kind of a mixed feeling on those. We will see, but we could be bottoming out on those already. We shall see. All right, looking at natural gas. Natural gas, it's a clearer picture, and it's a bearish picture. Now, also, we've got a lot more potential downside. We got a double bottom break up here. It hasn't formally failed because double bottoms don't fail in the same way, but I am wondering very seriously whether this is a bear flag, and it kind of looks like a bear flag at the moment. If so, this downtrend would probably continue down until we reach this trend line here, which would be in the 2.35 area. Now, against that, we are in a seasonal period of increase with air conditioning and then go rolling on into winter. Over the next 4 months, it would normally rise about $1 seasonally. But the question is, of course, we've quite often seen moves where that's been swamped by the downward move. Well, the last one was here, actually. So we could see that here, and if this double bottom is going to fail, we could well see a retest of this low here in the 1.886 area, and I think that is potentially on the cards over the next few months. We shall see. I do have a potential falling wedge here, and that's got possible support down at about the 2.67 area. Wondering about that, but I think I'd really like to see another low before I started thinking that had a real shot. Okay, let's have a look at metals. GC, we saw a nice rally up, and really, is this the time we can finally make that final retest of the all-time high? I hope so. But at the moment, all we've done is broken up from a short-term rising wedge and retraced less than half of it. I am thinking this might have prospects to the upside. We've certainly been waiting for this to retest the all-time high for quite a while. SI, I'm still wondering about a fail in the 39.40 area, and we've got a double top here, and that double top's now broken down. That's got a target in the 35.4 to 35.6 area. 60-minute buy signal is fixed, hasn't quite reached the possible near-miss target. Platinum, we could be forming a head and shoulders here, but equally this could be a double bottom setting up a retest of this high, so already getting pretty close to it. We've got a 60-minute buy signal fixed on Friday, waiting to see how that develops. Looking at, just looking at the palladium thing, that's got, I was sketching in this for much of last week. You can see it broke down slightly from it. This is a great position to reject back up into the high, just mentioning. So it doesn't mean it has to do that, but it's something I quite often see. All right, looking at platinum. Platinum, we've got a head and shoulders which broke down and made target. We've got another potential level bottom here, and 60-minute buy signal has fixed, not quite reached the possible near miss target yet. We've got nice setups for moves up on GC, on platinum, on palladium. The only dissenting view really is silver, but that could always, this double top could always fail back up into retest the high. Overall, I'd say it's mixed but bullish. So waiting to see whether we actually get a decent move next week. And with market turbulence, we've got a better chance of seeing that. And we've certainly the odds favour more market turbulence. So we shall see after a rally. Okay, looking at HG. HG, we had this big move down, and we've got a weak 6-minute buy signal fixed. That's been forming what looks like a little bull flag. Now I've got a very decent case for the dollar for copper to go down, and I'll show you that. But first, let's have a look at precious metals. Okay, gold. This has been basically compressing for a while. And this should be a bullish compression setting up a retest of the all-time high. We already had a flag which broke up, then this could be a triangle, but really we should be retesting the high before this does much else. So we've got a very, very old RSI 14 sell signal fixed, which I'm not really taking a lot of notice from at this stage. We've got a weekly RSI 5 sell signal fixed, which I'm thinking could play out and will play out after we see a retest of the high. And we're holding like a champ the weekly middle band, which I've got at 3277.93 at the moment. Now that is the support that needs to hold. If we see a break below it, on a weekly close basis, then that really could signal some more downside. But even then, I'd be thinking A, B, C for a flag with maybe a low down in the 3,000 area. Yeah, down here. So, but only if that breaks. All right, let's have a look at silver. Now, silver, we've got quite a lot of resistance up where, and I was talking about this a while before we hit it, and I was talking about the obvious trend line area being in the 39 area. It's a bit higher now. Obviously, we went slightly above it, but it's not significantly broken. We've got a possible level top here, and that has broken down, and this is a big resistance area. Doesn't mean we couldn't retest the high. Definitely not. We could definitely retest the high. And that, of course, could set up a nice little level bottom to go down again. So we will see. On the daily chart, we've got an RSI 14 sell signal fixed. That hasn't made target yet. And the little level top and the top has obviously broken down. We've got a possible head and shoulder neckline down here in about the 35.5 area, which I'll also be watching. All right, looking at platinum. Platinum, on the bigger picture, I've got possible resistance here because I am looking for higher on here, but I am thinking that all of these might well see a larger retracement. I'm thinking gold retest the high, and then there's a possible inflection point where we might actually see a significantly larger retracement. On platinum, you can see how that would, on silver, you can already see how that would work. On platinum, you've got a similar setup to silver, really. Looking at palladium, well, you can see what I'm thinking there too. I'd like ideally to go up to about the 1400 area, and then potentially we've got some significant trendline resistance there. We shall see. And this could be a bear flag. So potentially we could see a large decline after that. I don't know what that would be based on, but I'm just giving you the technical picture. All right, looking at copper. Copper, this was an interesting one because I drew... bloody hell, it's moved. That is annoying. All right, hang on a second. Bear with me a moment. I found a nice trip line there, I'm sure of it. But it is gone. All right, never mind. I thought I'd found a really nice trend line there, but what I would say is, or was it this one here? Yep, not quite as nice. But this is what I'm thinking may well be happening here, and I'm thinking we were pretty close to wedge support, and that may well break. So bear with me. Let's have a look and see if I can find it. Here it is. All right. This is a beauty. And this is obviously on the copper chart, which has been rising as the precious metals have been falling in a substantial trend from 2022. And I found this lovely trend line here. It's just gorgeous. And that is a megaphone resistance trend line. It's very similar to the one that I found on the US dollar back in 2022 as well, and then called the move down to megaphone support, which we then saw about a month ago, I think. So this is a very nice looking trend line. This is a pretty decent looking megaphone, and we are on our way back to megaphone support. And when that megaphone breaks down, I think we may well see a retest this low in the 310 area. So that is a really, really beautiful trend line. And actually, when I see something like that, it is generally pretty significant. And actually, I'll show you the one on the US dollar that I found. And it was... Okay, sorry. And it was, hang on, this one. And this was a really, really, really nice trend line. And I picked it up, I found it, and it was a peach. And it's not drawn quite right on this chart. Why is that? All right, it's drawn right on this chart. And this is just nice. So when I found this, I was expecting to see a test of this next. And obviously it takes a couple of years to do these kind of moves on US dollar, and it's a big move. It's a big way to go, but nonetheless, we made it. The copper one, if anything, it's nicer. So I'm expecting to see pretty high level of confidence, a test of this trend line here down in the 4.05 area. And if we see a break below it, I'm thinking we may well head back to 3.1. And this will be the end of a 3-year uptrend, which is ending now after basically a blow off high at this beautiful, establishing this beautiful trend line. Looking at GDX, not seeing an obvious test for a bigger test setup for a big retracement here. We've obviously got a smaller double top, potentially. Looking at GDX, got more trendline resistance here. It looks more convincing. We don't have a double top here. This looks at the moment like a bull flag. So we will see how that develops. All right, let's have a look at the other commodities. And on KC, I can't get a trend line to hold here. I'm wondering whether that means that we're just going to head back into the retest of this low, which I think ultimately is where this kind of consolidation would end up. I've got that in about the 277 area. Looking at sugar, we've got a possible IHS here. It is not, as I said, aging like a fine wine. If it's going to break up, it really needs to break up next week. Otherwise, this right shoulder will look too disproportionate really to the left shoulder. We will see how that develops. But really, if this is going to break up, then bulls need to start buying. All right, looking at CC, we've got an IHS which is broken up here and is making the decision as to whether it's going to fail. This yellow line is the level at which, if it goes below, then it does fail. We'll see how it goes. It's still thinking about it. I'm pretty neutral either way, I think. CT, we had a triangle breakdown. This was the bearish triangle that actually broke down, unlike the one on USD CAD. And this is heading to the obvious target for triangle breaks down, which is a retest of this low at 66.25. Lumber. Nothing compelling saying this is about to turn, but we do have a possible 60-minute sell signal growing. ZW has been, I've been leaning lower for a while. We have been going lower for a while. 60-minute buy signal is fixed, but that hasn't actually made it go up so far. I've still got downside targets I'd like to see made on all of the grains, but I'll go through those on the bigger picture charts. On corn, still looking for a retest this low. We haven't made it yet. Double bottom broke up and has mostly failed. If it fails, then I expect to follow through and go to this target here at 407.5. Looking at soy, we've gone significantly lower here, and this is the closest to making my bigger picture targets, as I recall. Week 6-minute buy signal is fixed and has really delivered nothing so far. On soybean oil, I'm wondering about a move down here. We've broken down below the megaphone support. We've got a double top target down in about the 52.1 area, and I'm thinking that target may well be made. A possible 60-minute buy signal is brewing. Looking at live cattle, I've seen a bit of a retrace here. Was overdue, not really seeing anything suggesting much on the bigger picture. Possible little head and shoulders forming there, maybe. Lean hogs is coming up for another test of the megaphone. This is actually potentially a little double top that's broken down. I didn't have much confidence in it, and I didn't put in the arrows, and not much point bothering at this stage. I think it's probably going to fail. I'm going to break up from the megaphone. We shall see. Okay, great. Let's have a look at the bigger picture charts on those. Lumber. Start with coffee. Okay, coffee. We're obviously still overvalued by historic standards, although less than we were. If we see another retest of this low, which I'd be expecting to see soon, that will set up a potential daily RSI 5 buy signal. That could be the basis for a decent rally. Looking at, and that would be on the weekly chart. On the daily chart, nothing is compelling, but I think we're likely to see a retest this low. We've seen a lot of failures so far at the daily middle band. All right, looking at sugar, bigger picture, we've obviously got this apocalypse head and shoulders that's broken down with a target in the 6.5 to 9 area, but we do have potential for reversal here. Nothing in terms of divergence, really, except for a weak RSI 14 buy signal, which hasn't reached target yet. But we do have a nice looking IHS that I've sketched in on the potential IHS on the hourly chart. We will see whether that develops. But breaking down below, back down below the daily middle band wasn't actually a promising development. If that continues, then we could just reject back into a retest of the low at 15.44. In which case, I'll be thinking about that apocalypse pattern again. CC. Cocoa, this looks like a double top, but isn't really because it's too big. So we do have a monthly RSI 14 sell signal fixed. Looking at the daily chart, no current divergence. Wouldn't be astonished to see this go down, but at the moment it is holding above the daily middle band. On wheat, wheat on the daily chart, I'm leaning towards seeing a retest of 499 and maybe 49550. We'll see whether we get it. On corn, I've been leaning towards this being a bear flag and retesting this low here at 385, and we're almost there. The low on Friday was at 387.75, so we've almost made that target. On the daily chart, we've got a possible RSI 14 buy signal brewing. We could be looking at a double bottom. If we see that, which you can see on the big picture chart, it would actually, this looks like big moves here, but actually they're dwarfed by the previous moves. This would actually be a modest double bottom with a modest target. So I'd be thinking that might deliver. In terms of soybeans, no current divergence on the weekly chart, but here I've been drawing in for months the potential bear flag, and that bear flag is now breaking down. Looking at the daily chart, it's breaking down with a target in the 93606 area, and I'm not currently seeing anything compelling saying that target won't be made. Looking at cotton, we've got a weak RSI 14 buy signal fixed, and we are seeing, I think we saw a very slight break of the wedge resistance. Like to see more. In the event that it went up directly, I would note that we've got a very nice looking potential double bottom here. I'd hate to see that ruined by another retest at the low, but obviously we need to see some a move over 67.5 and some trade over the wedge resistance and a move up from there. I like the upside though, and I do like the chances of this week RSI 14 buy signal. Looking at lumber, no divergence on the bigger picture, still looks like an overall bear flag forming, and probably is. I'm hoping that the next high will give me a trend line. We will. It's not going to be a channel, I don't think. Hang on, just bear with me a moment. Let's have a quick look at that. Okay, it could actually be giving me a channel right now. Not a channel, a wedge. That is a potential trend line resistance. It's not the only one. If we were to see a channel form, then we'd have a couple of other options. Well, that might be a megaphone. We'll see, but at the moment, there's a chance that we're actually making the resistance trend line now. We'll see. In terms of the bigger picture, we've retested this high here. We've got a potential level top. We've got absolutely no negative divergence on the RSI 14 or the RSI 5. All right, great. I'll just do a very quick review of crypto. So bear with me a moment. Now, one thing to bear in mind if you're interested in crypto is that generally speaking, crypto doesn't really have sustained uptrends without uptrends in equities, and it doesn't really have sustained downtrends without downtrends in equities. What does this mean? Well, it means it's going to be a struggle for crypto to go up while equities are retracing, and currently equities look an awful lot like they're retracing. What does this mean? Probably more downside. We've got this rising wedge here. This may well break down. We may see a 50% back. That could get us back on Bitcoin back to 95, 98 area. What are we looking at on the others? This could also get us back down below. We've got this wedge here. I would say the 50% would be at 98.23. That would be a very legitimate target here, but I don't really have a topping pattern to get at that. Looking at Solana. We've been seeing some weakness the last couple of days. We managed to get down to 155.81. I do have an obvious trendline support, and I've got that in about the 143 area, which is probably not a number that most people would like to hear, but it's not actually that far away from where we are now. I'm thinking we may well go and get that. On the hourly chart, we had a head and shoulders here. I've marked it in on the 15-minute chart, and it hasn't made target yet, and that's got a target in, you guessed it, about the 146 area. So I think that's the obvious area to go to. Looking at Ethereum, daily chart, we had an RSI 5 sell signal fix and make target, and we've got a weak RSI 14 sell signal fix. I'm leaning towards seeing more downside. Here, we've actually got a double top, which has got a target down at 38.2%. No, I haven't actually drawn in a smaller one for that. But it's got a double top target, which would basically be in the 3100 to 3180 range, and I'm thinking that's probably going to make target. So I've got downside targets on all of them, and I think there's a pretty good chance that it will be reached, because it is most likely statistically that this move down on Friday will be followed through, and we will see lower. So that's what I've been looking at all weekend. All right, great. In that case, I think it's a wrap. I will catch everyone again on Wednesday, and everyone take care.